Hey guys, my name is Aditya. Today I will be teaching you about the residential status concept which comes under income tax. So you guys know that everyone has to pay taxes. If you're a citizen of India, you have to pay taxes here. But before we get into that, you must first determine the residential status of a citizen. So for this there are two basic conditions and you have to satisfy any one of those. Your stay in India should be at least 182 days in the year that you're assessing your taxes, or you should have stayed this year for at least 60 days and been a resident for the past 4 years. In that case, you would be a resident if you satisfy one of these two conditions. Now that it's clear about who a resident is, you have to determine whether a person is a resident and ordinary resident or resident and not ordinarily resident. So for this, there are two additional conditions. You have to satisfy both of these conditions. You should have been a resident in India for at least 2 out of the past 10 years, and your stay in India should have been at least 730 days. Then there's another concept called deemed resident. In this case, you are not paying taxes in any country. For example, you're in a place like Dubai, which is the tax haven. If you're moving in and around the world and your mainstay is Dubai, but then you're an Indian, you would be considered as a deemed resident of India because you're not paying taxes anywhere else. You have to pay taxes somewhere. So you're a deemed resident in India for the purpose of this. If you don't satisfy any of these conditions, you would be considered as a non-resident. A non-resident in India would have to pay taxes only on the incomes which are related to India. For example, which is accruing in India. If you have a business in India and you're getting income out of that, you'll have to pay taxes on that. However, if you're a resident, you'll have to pay taxes on all the incomes you get.